Hi guys, what is up? Welcome back to the channel. This is Ariam Dela, and in today's video I'm going to be telling you the importance of setting your take profit. Yes, I know that a lot of people actually speak about the importance of placing an SL, which is a stop loss, which is going to cap your losses anytime you are not around or watching the market. However, few people actually talk about the importance of setting your take profit. In today's video I'm going to be showing you a particular trade that I called out in my Telegram community. If you are not part of my Telegram community, then you definitely missed a 100 pip move on gold, even to the downside. I'm going to be speaking about how I was supposed to make $1,000 but ended up closing in $700 just because I did not set my take profit. So without further ado, let's just dive right into the video. So in this particular video, I am currently funded with the Forex Funder, a 50k live account, and I'm going to be showing you my progress on this account, but in another video. So here in the case over here, I actually spotted an opportunity which we can actually dive into on the market right now. So if you look at the charts, right, I actually looked out for an opportunity on the market, right? I actually spotted a previous low which was around this point. I marked out my zone and I saw how strongly the market came to close during the Tokyo session. So I was expecting more of like a retest with a strong confirmation. So I spotted that strong confirmation, which happens to be this particular candlestick pattern. So once I spotted this strong momentum candle, which is a simple break and retest of the trend line, this was currently around 8:15. I actually called out this trade on my Telegram community and my signal group. So I actually have a free community where I call out trade signals as well, and I have a paid signal community where I actually call out trades as well. So I called out this trade and I put my trading criteria over here, and I had my stop loss right above the structure, and I decided to go in for 100 pip TP. So I actually set in my SL and I did not put in my TP. The reason I did not put in my TP, I just decided to manually watch the trade because I was actually on the charts. I was actually editing YouTube videos, so I just wanted to be updating with time. However, I spotted this particular weak point over here, and I kind of, envisaged that this particular point would be a potential TP. So looking at the market, I was just like watching the market. The market was moving in profit and the market went into loss for some time, then started, trailing, moving towards profit zone, right? So over here, this is where the market went deeply into loss, but then finally came in, and that's why a stop loss is always there for a reason. Anytime you are in my community and I call out a trade, it is important to use the right take profit and SL that I put there. The reason is because I analyze the trade, and if you've been following me for some time and you believe in me, then it means that you have seen my track record and you have seen my consistent wins over a period of time. So anytime I have a 40 pip stop loss, please do not go and use a 20 pip stop loss. This is simply because I have my reasons for doing that. I kind of work with candlestick confirmations and key levels, so it is important to know exactly where to place your stop loss. So I actually allowed the market to do what I actually saw the market in a loss. I was not fumbling because I knew how much I was risking per trade. So all of a sudden we saw the market doing so well, and then could you just imagine? So after the market actually hit my TP, you could see that this was a very sharp spike. I entered two positions on 0.50. I was supposed to be making like about 1,100 because when the entry came over here, I entered 0.50, then I took in another position. So I was supposed to make about $1,100 to $1,200. However, in as much as I put a TP over there, I did not set my TP. And so you know what? I was actually on the chart, and when I saw the spike, I was ready to go and close it, and I saw about $600. Then if you look on the smaller time frame, I was kind of scared by the strong bullish candle. So I was like, you know what if I actually saw all this $1,000 profit, did not take the profit, and I'm kind of being greedy to wait for the market to come back into that take profit zone? What if the market does go the other way around and I'm going to be losing out on the money that I was supposed to make? I'm not going to be doing that mistake. So I decided to close in on the little profit that was there. So I'm going to pop it up on the screen somewhere here. You can see I closed in about $690, which was not supposed to be so. So this is a lesson that I've learned, and I want to share it with you guys, that always make sure. Now, if you actually check this trade, this was a risk to reward of about 1:2.3 or 2.5 thereabout, right? So this is something simple. If you are risking $1, it means you're going to be making times 2.3 of that. If you're risking $5, it means you're going to be doing times 2.5 2.3 of that, and that is a very simple. So it means that for you to actually lose out on your profit, then it means that you are going to have to be losing 2.3 times of your profit before you are going to be losing out on how much you have gained on this actual trade. So this was a very big lesson for me. I'm noting it down that next time I'm going to have my SL where it needs to be, and I'm also going to have my take profit where it needs to be. This was a very short video, but a very informative one. Always make sure to set your TP. It's important to set your SL as well as your TP. Thank you guys so much. My name is Ariam Della. See you guys in the next one. Peace out.